Hello, guys, and welcome to your market report for today, Tuesday, August 28th, 2018. And listen, I'm really glad to have you guys here. Now, the first thing we're going to do is we're going to get into talking about Bitcoin because Bitcoin's the biggest shaker, possibly today. I think it is the biggest shaker. The Dow Jones has been moving a little bit too. We're going to get right into starting the charts right here. And we're going to get right into cryptocurrency right now. So it's over $7,000, $7,065. Now here's what it's doing. It's going to do one of two things. Either this is the breakout and we're going to start back into a bull market again, or we are making another lower high. One of the two. Now, it's a little bit indecisive right now. We can't really tell. Looking at the 12-hour chart here, if we pass $8,000 and start to move toward 9,000, that means that we are breaking out and we're going back into the bulls are in charge. But if we get up around here, somewhere around just under 8,000, maybe 76, 7,700, 7,800 along in there, and it turns over and it falls again, then we've just made a lower high again. Like we've made three lower highs, 1, 2, 3, count them, and this could be the fourth. If this is the fourth, well, we're going to get another buying opportunity if that's the case. Now, these buying opportunities, you've had 1, you've had 2, you've had 3, you've had 4 buying opportunities. If we're lucky enough to get a 5th buying opportunity, then you probably want to take advantage of that before the train leaves the station, so to speak. Now, let's take a look at cryptocurrency market capitalizations. What we're looking at is all the coins are up today. We're up to $228 billion with a Bitcoin dominance of 53%. And some of the coins are up substantially, like IOTA, up 21% today. Monero's up 10%. You remember I've been telling you how good a coin Monero is? It's a great little coin. XRP is up today. Ripple's up. There's some really good, some of the coins are not up that much yet. Like EOS is not up that much yet. It's only up 5.7%. So EOS is still down quite low. Litecoin is only up 6%. It's only 61 bucks. It's still down in low territory. It was like 55 bucks or whatever, but now it's 61.14. So things are going good for the cryptocurrencies. Now let's take a look at the Dow Jones. Dow Jones today it's past the 6,000 mark. Now, I told you guys that I figured it would go past the 6,000 mark. Let's take a look at, and let's refresh the page and see what she's doing today. As I say at close, oh, the market hasn't started yet. Okay, we've got 7 more minutes to wait until the market starts. Well, I'll tell you what. I figured she'd pass the 6,000 mark, 26,000 mark. She's at 26,140, no, 26,049 right now from what we had yesterday. We had an update yesterday at 256 points. Now, I consider the market, once it passes 26,000, to be in nosebleed territory. I call that nosebleed territory. This is all dependent now on what the bond market does. So we're very soon going to take a look at what the bond market's doing today. If the bond market starts to climb too high too fast and the stock market's in nosebleed territory, we're going to get a precipitous drop in the stock market. Very similar to what we had here when the stock market was 26,616 back on January 26th. We saw a 1,000-point drop in the stock market, more than 1,000-point drops. This one day alone right here, we dropped from 26, what was we at? Anyway, we had some big drops in the stock market. Scared everybody for a little bit there, but the Federal Reserve to the rescue. Anyway, Now let's take a look at oil prices today. 68.97. They are keeping oil prices in a range between 65 and 70 bucks. I'm almost certain about that. Oil's up 10 cents on the day. It's up 0.15%. But I think it's tapering off. It's not. I don't think it's going to go too much over 70 bucks right now, because somebody is controlling the oil market, just like they're controlling gold and silver. Silver prices today. What we're looking at with silver today is silver is found a new lower range in the $14 area, and it's been staying in there for a little while, and this has got everybody scared of silver and gold. They're scared of gold right now too. They're scared that the bottom's going to drop out of the price. That they're going to buy in, and the bottom's going to drop out. That's what they're scared of. But you shouldn't be scared of that. And I'll tell you why. If you're the average person out there that looking to invest in a little bit of physical silver and keep it in your own possession, don't be scared of the bottom dropping out. If you buy in at these prices, say you buy in at $14.50, and say you pay a couple dollars premium, so I mean, that's normal, that's standard, and you bought your silver, you put it away for yourself. Do not buy this looking in the short term to make a profit. Buy it thinking to yourself that you're going to ride it out no matter how low it goes, because if they drive the price down too low, what they're going to do is they're going to create a shortage of the physical silver. Because the physical silver is a number, physical silver that's available for sale into the market. How much is available in those storehouses of physical silver that's available for sale? Now, I'm not talking about the physical silver inventories that exist all over the world that are extensive. Those inventories are not available for sale. Those are people's, what people have bought and put away for themselves and stuff like that. I'm not counting that. There's a tremendous amount of silver, probably in the order of 10 billion ounces available out there that's been put away by people in their saving it and everything. That's enough to flood the market with silver, but that's not available for sale. Nobody's going to sell it. They're all hanging on to it. How much physical silver is actually out there that is sitting in a warehouse in 1,000-ounce bars, ready to be sold or made into coins or sold for industry? How much is available of that silver? That's the number I'm interested in, and that's a number that nobody out there, me or nobody else, knows what that number is, and they are keeping it secret from us. And there's a reason for that. It's because I think it is in a very, very, very tight, limited supply. Most of that supply is coming from the miners, and it's what's keeping the industry going. When you go out and you buy from these silver dealers like Kitco or APMEX, you are taking away from that particular inventory, which is a very tight supply. If there's a massive run on that inventory, the game's over. On the 1,000-ounce bars, if there's a massive run on the 1,000-ounce bars, for coin and bar demand, could do it. Because most of those 1,000-ounce bars are being allocated for industry right now, and they're keeping up with industrial supply. They're also keeping up with coin and bar demand supply. And we've been helping them. We've been getting scared, taking our silver, and not we, but I mean in general, people out there in general, not me. I haven't been doing it. I'm not going to do that. But these guys are out there dumping their silver big time into the market. They're taking their whole savings of silver that they've put away from themselves. They're going in and sliding it on the table and saying, how much will you give me for this? This is helping these bankers. This is helping these bankers tremendously to keep this game going longer, because it adds to that 1,000-ounce bar supply that they need to keep industry going and to keep the coin and bar demand supply going. And this whole thing, it could end in a flash because that supply is so small. One billionaire could come in and he could buy it all up, what's left, And so there's good reason for them to keep it secret. Anyway, let's take a look at bonds and rates. And the reason why we're going to take a look at bonds and rates is because it has everything to do with what the stock market's going to do in the very near future. What we're seeing is we're seeing on the long end of the curve, we're seeing the bond yields go up. The 30-year has now breached 3% again. And the 10-year is starting to move up. Yesterday, I said that I believe that it was the inflection point, and I called it. I said, I think the bond yields are going to start to rise again. And that's what we're seeing. We're seeing them starting to rise. The reason why I said that is I was just thinking to myself, these guys with these deep pockets, these institutional investors and stuff, they've basically gorged themselves over the last few months. Just like being at a feast, they've gorged themselves full of these bonds and treasuries. They've bought up, and they've actually dropped the yield down below 3%. When it was up around, the U.S. 10-year was up at 3.1%. And now it's been down at 2.8, and stuff. They've bought so many. I think they've gorged themselves on them. I think that they're done. I think their pockets are empty and their pockets are full of bonds. And so they're finished gorging. And what I think is the bond yields are going to start popping now again, because the Fed hasn't stopped their program of quantitative tightening. They're still at it. In fact, they've increased it. And so they're going to, and they're raising the lower end of the curve. The Fed, they're continuing to raise. They haven't quit their interest rate policy of interest rate hikes. They haven't stopped that. They haven't come out and said, okay, we're done. We're not going to do any more interest rate hikes. They're raising 25 basis points every now and again, whenever they can see the chance, whenever they can get in there and sneak it in. When they can sneak one in there without affecting the markets too much, they do. And they've been sneaking them in, and they've got that 3-month bond there. It's over 2% yield now. The U.S. 3-month there. Take a look at it, 2.12. Actually, the yield curve is extremely flat right now. Everything's almost at 2 point something, except the 3 years just breached, and it's into the 3% range, but just barely. Okay, so this could have an effect on the market very soon if these yields continue to rise, and this market is topped over 26,000. If these yields continue to rise, we could see a sudden market fall off in the market. We could see that. We could see a big drop in the market, something similar to what we saw before back in January. So now let's take a look at the U.S. dollar index today. 94.46. She's down 0.30, and this should be affecting the silver price. Where is silver on here? Silver prices. Okay, here's silver. Should be affecting the silver price positively. And what we're seeing is a negative effect on the silver price. So silver's probably going to bounce later this afternoon. I'd expect it to bounce back up very close to $15. I don't think it's going to make $15 today, but I think it's going to finish today somewhere very close to $15, probably $14.96 or something like that. Anyway, this has been your market report. Thank you guys for listening. Like and subscribe, and we'll catch you tomorrow with another market report. Bye-bye for now, guys, and have a really nice day, okay? Bye-bye.